Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking energy and those oil prices holding above 50. Seeing prices above 50 for this long a period and actually extending and starting to look like a building of a trend higher, something we haven't seen in a long time. Recall that right after OPEC announced their production cuts last November, we saw oil kind of decline, kind of trade in a range that wasn't very appealing to them. They were hoping oil prices would shoot higher. I think ultimately their target 60, but right now we're seeing oil prices hold above 50 despite a lot of noise and a lot of static coming out of the dollar, coming out of U.S. politics. We've had geopolitical risks, so we've had weather, climate risks. We've had a lot of things going on, and all through it, oil's been able to sustain. So right now, holding above 50, I think is very bullish, especially on a weekly basis. Looking at the fundamentals, yes, we got lower supply levels. That is helping keep oil prices higher. We are seeing demand globally rise. That is something that's been missing that I think is really the backbone to the rise in oil prices here, along with OPEC's cuts and the future of those cuts. What are they going to do when they meet in November? Is this going to be an extension for maybe a quarter? Are they going to extend it for another year? I think ultimately they want to see the rebalancing get prices somewhere north of 55, maybe closer to 60. But the fact that we have made this move and have been able to hold it for so long, despite the previously mentioned static, suggests that it may be working. Lower supplies, higher demand, production cuts in place. So right now it's very much up in the air. How long are they going to extend those production cuts, if at all? And if they do take them offline, what does that do to oil prices? Will they immediately tumble? Because right now, when you look at oil prices on the rise, you look at what's happening in the Gulf and what's happening in the U.S., the shale producers are going to come back online shortly. They like to trade, they like to produce and pump when oil prices are north of 50. So we are there, we're holding. It'll be interesting to see how that works. But I do think production cuts will be extended, at least for the short term, to get those oil prices where OPEC really wants them, which is closer to 60. We're not there yet. So oil prices still trending higher, holding above 50, but it all comes down to that November OPEC meeting to see how long we can sustain these levels. This has been Todd Colvin coming to you from the floor of the CME Group.